Extraordinary scoop that first came in August. Now we get the real details, and perhaps those current employees and former employees not selling as much as they could have done.
That's right. So, again, this is a record valuation for OpenAI and for just startups right now, surpassing SpaceX as the most highly valued startup. That being said, there was more, there could have been more units sold, is what we're told. And actually, employees chose not to take up all of that potential share sale. So, it could indicate that employees are feeling optimistic about the future of the company and that the valuation could go even higher. But of course, this is an ongoing story, and there are still a lot of uncertainties as well in OpenAI's future, including its ability to go forward with the restructure.
When there is a tender or a secondary or any kind of financial transaction, Shirin, there's always a data room. Just take my word for it. And so I find the group of investors here really interesting. Third parties that were able to buy those shares from employees. Just run us through the list and any that caught your eye.
That's right. So many of them were expected. We have Thrive, also a former large investor, as well as SoftBank, another major partner. We also have Abu Dhabi MGX, Dragoneer, and T Rowe. MGX is an interesting one, given we're seeing more money coming in from overseas, from the Middle East, into AI companies. This is just an ongoing, as I find in AI, once one investment closes, it's the beginnings of another one. So we can expect these sizes to just get bigger and bigger in terms of funds going in and sales being shares being sold.
I mean, that's what's extraordinary, is the fact that they raised money, fresh money from SoftBank back in March, and the valuation has just spiraled even since then, Shirin, even as, remind us of the data and the fundamentals, the company remains unprofitable. And at the moment, revenue's tiny in comparison to, say, a Netflix, which is also worth about $500 billion.
That's right. So while we're seeing the revenue increase rapidly, they have something like 700 million users. At the same time, the company is also unprofitable, and that's because of the large costs to fuel basically the development of AI. There's huge data compute costs. There are these unprecedented data centers that they're building out. There are researchers. All of that takes a lot of money, so it's still a highly capital intensive and unprofitable business, even though the revenue is growing at a very fast rate.